Awesome. Thank y'all for being here today. Also, thank you to Greg for being here. Greg's going to be our presenter about this. Interesting topic. You know, one of the things that within the Top Crop Group we try and do is bring you new ideas, new things that are floating out there to make sure we can understand how can we not only help your business agronomically, or things like this, figure out tax differences, where we can try and make our farms more profitable, make sure we're heading the right direction here. Appreciate you all being here. This is a very interesting topic because it sounds like it's a chance to, I was talking to Mark about it, said there have been other programs like this in the past for hogs, for other operations. Here's a chance to look at changes you're doing on your farm last year, this year, in the future that can head right towards the bottom line as far as tax credits. I'm no tax expert, so don't take tax advice from me. Take that from Greg here.
I'll be the tax expert.
So with that being said, Greg, anything else?
No, that's good. Yeah. Hey,
Awesome.
everybody. I have the privilege of speaking across, I speak everywhere. A lot of national conferences I speak. I grew up in Waldron, by the way. So this is pretty cool for me to be able to speak to you guys. I was born and raised in Shelbyville. Well, I was born in Shelbyville and then we moved to Waldron. So this is really cool. Thanks for having me. Let's talk a little bit about, well, I know this can be a dry topic, talking about tax. This will probably be fairly exciting because this is an opportunity for you guys to save some tax dollars, okay? Based on things that you guys are doing. One thing I want to say is I am not here to replace your CPA, okay? I'm an accountant, just like your CPA, but I don't want to feel like that you guys feel like you have to. I'm not here to do your tax work or anything like that. We specialize in a couple of areas, and that's what we're going to talk about today is one particular incentive. I lead our practice at a firm called Alliant Group. So Alliant Group, we've been around for 25 years. I've been there 16 years. We've done over 100,000 studies, which this is what a study is. This is what we do for folks, which is, as it pertains to the R&D credit, we're reconciling what you guys are doing with what the IRS considers to be eligible for the research and development tax credit, okay? The people that work on our studies at our firm, we employ agronomists. We have a lot of people that speak your language. They're very up to speed in terms of whatever precision ag software you're using, whether that be Op Center, Field View, something by Ag Lead or something like that. So just keep in mind that I'm looking at this from a tax perspective, but we have professionals that are looking at this from an activity perspective as well, okay? So to date, across the country, we've saved agribusinesses about $2.5 billion in tax credits and incentives. How many of you guys have heard of the R&D credit, by the way? Okay. How many of you are taking advantage of it? I'm going to guess 0. Okay. All right. So there's a big difference. I spoke at the Indiana Ag Policy Summit 2 years ago, and there's a big difference between your eligibility for this incentive and your awareness. You're probably completely eligible. You are also probably completely unaware that you're eligible. So that's what we're going to talk a little bit about today. I want to preface my remarks just by giving you, kind of framing them with some of the people that we have. So at our firm, and these are employees, we have 6 former IRS commissioners on staff, right? These are folks that are presidentially appointed. So the last one we brought in was Danny Warfel. Mark Everson was appointed by President Bush and was commissioner of the IRS. These are the guys testifying in Congress. The person that leads our ag practice is this guy, dear friend of mine. Have you ever heard of Mike Johans? He was former Secretary of Ag under the Bush administration. He and I do a lot of joint presentations together. So Governor of Nebraska, actually Mayor of Lincoln, Governor of Nebraska, Ag Secretary, and then Senator from Nebraska. So the thing that we use and Mike is really good at is trying to get this word out in terms of eligibility for this incentive, okay? Also, we have Heidi Heitkamp. She was former senator. She was a representative and then a senator from North Dakota as well. So very farm-centric in terms of her focus as well. And then I just talked about Danny Warfel. So, okay, let's get to why you're here, and that's talking about the R&D credit. So here's the thing I would say. Well, let's kind of start from the top. So an R&D credit or a tax credit is a dollar for dollar reduction in the amount of taxes that either you have paid or you will pay. Okay. In other words, and Indiana has a credit. The federal government also has a credit. And I would say for every dollar we spend that is eligible for the credit, I would expect us to get about 15 cents of that dollar back in the form of a tax credit. Okay, meaning, and we can go all the way back to 2022. So if I pay tax and I have a credit, I get a refund. Okay, so you will physically get a refund check from the Internal Revenue or the Indiana Department of Revenue as well as the Internal Revenue Service. Okay. If I haven't paid tax, so I would say, I get to talk to a lot of different industries. Farmers have a special loathing for paying tax, right? You guys will do anything you can to just not pay tax, right? You hate it, right? So what do? You prepay expenses, you buy equipment, right? You take a lot of Section 179. If you know any part of the tax code, you probably know Section 179, right? That allows you to fully depreciate or buy a piece of equipment, you write it off all in 1 year, okay? Guys, these are timing differences. Does your accountant ever talk about kicking the can down the road or deferrals, right? You've heard that, right? That after a while they're like, listen, at some point you're gonna pay tax, right? These credits allow you to pay tax. You're paying tax. You're just not paying it with your money. You're paying it with these credits, okay? If I cannot use a credit, federal credits carry forward 20 years. So I don't lose them. I get to use them in subsequent years, okay? State credits also have a carry forward provision. A lot of folks in Indiana will pay state income tax even if they get out of federal income tax, right? You guys know why that is? It's because Indiana has a cap on their 179. They only allow you to include $25,000 of 179. So you can get out of paying federal tax or deferring that federal tax. In Indiana, you're going to pay. And so these credits will come back. A credit, like I said, it's like a dollar for dollar reduction. Okay? I'm guessing nobody likes paying tax, right? Okay. I don't like it. Okay. One of the things, when I talk about R&D and probably why your accountant has not brought it up is because the name sucks, right? And what I mean by that is when you hear the term research and development, I think of what Corteva does, right? Lab coats, beakers, test tubes, those types of things. And that's what often accountants think of, right? They think, and by the way, I grew up in a really rural area. I grew up in Waldron. Most of my friends, their dads were farmers. An acre of corn, I'm sorry to say, it looks like an acre of corn to me, right? It looks identical. I don't know any difference in that being an accountant, and so does your accountant. So if you haven't heard about this, it's not because your accountant's not doing something right necessarily. It's just the fact that it just kind of all looks the same to us as accountants, right? It just does. And so what you don't, or what we fail to understand, I understand it now, by the way, but what I fail to understand is the fact that you guys, most farms are farming by the inch, right? I'm trying to get every single acre, or pardon me, every single bushel out of that respective acre. And that's where your eligibility comes into play, right? So we don't need lab coats, beakers, test tubes. Anytime we're trying to improve yield, that's typically going to be an area of opportunity for the R&D credit, okay? One of the questions, when I was at the Indiana Ag Policy Summit, and I'm going to talk about what qualifies and why and how this all works and what costs we can include, because I said 15% is the credit, but I didn't tell you 15% of what. But when we were speaking there was a farmer that raised their hand and said, why is the federal government doing this? Why are they giving us a tax credit for, how many of you guys are trying new hybrids? Trying new fertility treatments, right? You might trial a fungicide or crop protection products or change your tillage practices or do population studies. That things we're doing here, I'm guessing, right? These are all things that are going to be eligible for the credit, by the way. But you're not doing it because you're availing yourselves to a tax credit because you didn't even know the thing existed. So why is the federal government in the state of Indiana giving us a tax credit for something we're already doing? Here's why. So, in the state of Indiana, over the last 12 years, anybody want to guess how many acres of farm ground we've lost? It's about 300,000 acres of farm ground, right? This is no different than Ohio, Michigan, Kentucky, Nebraska, Iowa, Illinois, all those. Nobody's tearing down a subdivision to plant corn. Nobody's doing it. It's going the opposite way. And so and I would argue in the world, we've never been more dependent on US-based agricultural products, yet our capacity for farming continues to shrink every year. So, like many things within the tax code, the government tries to give you tax credits and deductions for things they want you to do, right? They tax things they don't want you to do. They give you a home mortgage deduction because they want people to buy houses. They tax cigarettes because they don't want people to smoke. Does that make sense? They give you guys a tax credit for trying new things because they want you to try new things. They're trying to subsidize the risk that you're going through by trying those new things. That's all this is. This is just a mechanism to try to promote a certain behavior, and that behavior is trying to get you guys to try new things, okay? So, let's talk about eligibility, and then we'll get into the costs that count toward the credit. So, there's 4 things that we have to prove in order for the government to consider something eligible for the R&D credit. So I'm just going to go through each of these 4 things. If you have questions, please interrupt me. I'm happy to answer. My goal is you guys walk away with a really good understanding of what this is, how this works, and how it applies to your respective farm. Okay? So, number 1 says, well, in order to claim the credit, the farm has to be attempting to develop a new or improved business component. So this criteria was put in place simply to eliminate the opportunity for people to do research solely for the purpose of claiming an R&D credit. They want things that are eventually going to be commercialized. So your business component is the grain that you guys are selling. That's your business component, right? So I'm trying to increase production of grain. Can be some processes that you're doing as well, but I would say for the most part, just think this is by far the easiest criteria to meet, right? Because all of you have a qualified business component because you're farming. Let's go to the next one. And this is where people get sideways with the credit. It says, well, in order to claim the credit, we have to be attempting to discover information that's based in the hard sciences, okay? So the purpose of this criteria was to eliminate soft sciences, but you notice on this side, we talk about this discovery test. So I don't want to give you a civics lesson because that's super boring, about as boring as tax, but the way it works is Congress, they write code, they write the law. The Treasury Department and the Internal Revenue Service, they write regulations. Those are just their interpretation of the law. Like, here's what we think this means. So the original criteria said, well, you have to be attempting to discover information based in the hard sciences. Clearly, agronomy, chemistry, biology, what you guys are doing on farm clearly qualifies as a hard science. But the Internal Revenue Service made 2 tests of this. The first test was, okay, it had to be based in the hard sciences. The second test is what they called the discovery test. And this discovery test said, well, in order to claim the credit, you have to be attempting to discover information that's new to the world. Revolutionary or groundbreaking. How many of you guys are doing that? 0. None of you, right? None of you are doing things that are new to the world. You're doing more applied research. So from 1981 to 2001, that was the lay of the land, right? Which you had to be doing things new to the world. In 2001, they changed that criteria and said the information we're discovering does not have to be new to the world. It doesn't have to be new to the industry. It just has to be new to the farm, new to the operation. Meaning, I haven't tried this hybrid before. I haven't tried this fertility treatment. I haven't tried this tillage practice. I'm going to test it to see how it works. That makes those acres eligible for the credit. Does that make sense? How many of you guys do side-by-sides? Right? You guys do that where you split your planter and do a side-by-side? It's a great example of an experiment that you're conducting. All right? Very, very, very simple. Okay? All right. Thirdly, we have to have some uncertainty related to the project. Now, when we talk about uncertainty, I'm not referring to uncertainty related to, is this going to grow? That's not what I'm talking about. I'm talking about uncertainty related to performance. How is this going to perform relative to what I've done in the past or what I'm doing currently? So when I try a new high, so these guys say, hey, we got a new number. We think it's going to work really well. It's drought resistant. It's got this, we think it's going to perform better. Typically, people try a little bit of it, right? They don't say, okay, plant it on every acre. They're going to try a little bit. And they're going to do that in a side-by-side environment, right? Or they may do a full field trial. They may split their field. It really doesn't matter. But that's where this uncertainty exists. Okay, and I'm going to measure that. Now, lastly, and this as an accountant is where I get hung up, or did traditionally get hung up, and where your accountant gets hung up, is we have to go through the last criteria, which says that, well, in order to claim the credit, you have to attempt to eliminate that uncertainty by going through a process of experimentation. How do farms experiment? You plant it, you spray it, you let it grow, right? And then at the end, you measure the results. You guys all have yield monitors, or most of you probably do, where you say, this side, what I planted last year did 200 bushels per acre. This new seed did 215. I'm going to do more of the 215 and less of the 200. Does that mean? Experimentation and farming are identical. They look identical. That's where your eligibility exists. Any questions about that? Anything I can answer? Anything that's not clear about that? Cool thing is, you're probably already tracking all this information. I'll let you in on a secret. You guys have a horrible reputation for record keeping with accountants, right? They think, oh God, farms records suck, right? They're horrible. That's more financial information. Your planting, spraying, and harvesting data is typically pristine because it's already being captured contemporaneously if I'm using some sort of precision ag software, right? It's capturing in the spring what I plant, where I plant it, how much I'm planting, right, and when, right? It's also capturing what I'm spraying, when I'm spraying it, the rate I'm spraying, and then in the fall, when we're harvesting, it's capturing the results of that experiment. It's capturing the differences in yield. Okay? All right. So I talked about, well, let me ask you, does this sound like is anybody in this room doing these types of things? Is this what we're doing?
Everybody is.
Everybody is? Yeah, I would think so. Most of you, if not everybody, is doing these things. Okay. So what counts? The biggest cost for you is going to be your input cost. Think seed, fertilizer, and chemical costs related to those acres that we're trying something new. Okay? So, when we have, and guys, I'm going to give you some examples, but if we're a 3,000 acre farm and we're running kind of normal what people are doing, just so we're all clear, we're probably talking about hundreds of thousands of dollars of tax credits here, by the way, right? We've done over 2,000 studies for row crop farms across the country, okay? Indiana has such a lucrative benefit for this. We're not talking about, hey, this is gonna be a $100 benefit. This is the way, and the idea is this is the way it's going to incent you to do these new things, okay? So, if I'm changing out my seed, it's not that I just get my seed cost. I need the other expenses in that acre to supply or to support that experiment. right? So I can't measure the performance of a seed in a vacuum. I need the fertility, I need the chemistry put on there, all those things. That's why you get all of those costs, okay? In addition to that, agronomy-related expenses, soil testing, tissue sampling, somebody writing scripts for you, those costs also are eligible for the credit, okay? Lastly will be labor. So the cost of planting, spraying, and harvesting those acres, that time they spend in that field is also going to count. Okay? Any questions so far?
Just to kind of follow that, Greg.
Yep.
Last year I tried to do 113-day hybrid.
Mm-hmm.
I want to plant more of that this year, but on different farms.
Yep.
Does that count?
Yeah, that does count. Now, so the one thing I often hear is that, farmers start going, okay, so I'm going to start working this credit, because here's what I would argue is the credits you have in the past are completely coincidental to this credit existing, right? You guys didn't know this credit existed. You just were doing it because you're trying to be the best operation you can be. But what happens, what's an acre of corn cost you guys? $600 an acre, $500 an acre to plant? Am I in the ballpark, right? Okay, if it's $600 an acre and we're trying something new, that's $90 per acre in the form of a tax credit. That's what we're talking about here. So when we think about the decisions you're making, you may have multiple experiments that are going on. Over here, we might be trying a new hybrid. Over here, worked on this field with this certain fertility and this soil type, but we're going to try it over here where it's a less productive field. Or over here, we're going to do a population study. Over here, we're going to change our tillage practices. Over here, we're going to try a fungicide trial. The idea is that you work this credit, right? And that's what the government's after, right? Is that you don't fall into the eligibility, but you're seeking to do things that are eligible. That's why this happens. Right? One of the examples I give often is that before the president last summer signed the One Big Beautiful Bill, did you guys know if you bought an electric vehicle, you got a $7,500 tax credit for buying an electric car? Anybody know that? And they took that away from you, by the way. Did you?
Didn't buy one.
And you still didn't buy one, that's right. Exactly. Right, especially around here. But do you know why they had that? Why'd they give $7,500 to people to buy an electric car? Because they wanted you to buy electric cars, right? Why are they giving you a tax credit for trying new things? It's because they want you to try new things. That's all this is. They're trying to subsidize the risk that you guys are incurring by spending more on Pivot Bio or trying a new seed and saying, hey, I'm going to try this to see if this works. That's all this is. They're just trying to incent a certain behavior. Okay?
Is it too late to file for 25?
No.
So,
I mean,
we
listen.
started last year.
So a lot of times with studies, we're doing a retroactive study where we're looking at 22, 23, 24, and 25. Okay?
Oh.
Right? So if I pay tax in those years, I get a refund. But here's the cool thing. And I've worked with a lot of farms that have constantly deferred, right? They defer, they take a lot of 179, they do a bunch of different things, right? The problem with that deferral is eventually you're gonna owe. You're gonna pay sometime, just when are you gonna pay? If I start stacking up these credits, it allows you to keep some of your money. November, December for farms is you get out the checkbook, you talk to your accountant, you're like, what do I write? Right? You're trying to get rid of all your money. This provides you the opportunity to keep some of your money, right? The reason you try to get rid of everything is because I don't want to pay tax on it. But this allows you to keep some of that money in your pocket that you guys have earned. So you can get refunds in prior years, but even stacking these credits might make sense as well. Now, next Monday, some of you might be writing checks, right? I'm going to imagine most of you are going to file by March 1st, is my guess. because you don't pay quarterly estimated payments. So you settle up March 1st. This allows you that if you owe tax to get out of that, right? Now, we got a week. That's a tight timeline. I'm not going to argue with that. But keep in mind that is available, that you have this opportunity. And you may have 2022 falling off as well, right? Because we have 3 years from the date a return was filed to file an amended tax return. Okay? I know all of you are wanting to become accountants right now. I can see it in your eyes. Yep.
Greg, we're talking about practices. What about hard equipment? I bought a new planter last year.
Yep. So equipment is specifically not eligible for the credit because it's capitalized and depreciated. Even though you might take section 179 or you may take bonus depreciation, equipment, the cost of the equipment itself will not be eligible. However, you may be trying equipment to try a new technique, right? I've had people that have tried, chicken litter, right? And they bought a new spreader to have more uniform spreading of that. High-speed planters. I've had people buy strip tillers, right? Things like that. That they're just trying to change their practices. Ultimately, it comes back to those input costs for those acres. That's where it's ultimately going to come back to. Is going to be the big, what's that? You'd still get the input costs, even if you're renting it. But you're not going to get the cost of the equipment itself. The rental cost on that equipment is going to be ineligible. Yeah.
Yeah, if you get off on the acres that you do a trial on, like, is there a percent? Like, say I trial 90% of the new thing I want to do, and do 10% the old.
Yeah.
Do you get the whole 90%? How's that?
There's no limitation on how much credits you can claim. Okay. This was a point I was gonna bring up, because when I talk to farms, some of them go, well, hell, I'll just plant all new seed every year and I'll take 100% of my farm, right? That's not gonna fly, and here's why. We're trying to make an argument that we have uncertainty related to something, right? It's hard to demonstrate that uncertainty exists if we're planting it the majority of places, right? Meaning we want to go through some systematic trial. Now, to that point though, we've had not across the entire acres, but across a particular field or multiple fields where we may have a check strip where 90% we're planting something new, we're doing something new, and we have a 10% check strip, like a quarter-mile test strip that we're just as a control. That's what we want to see, is something sort of systematic that can demonstrate that we're really going through an evaluation process.
Say, for example, say you're going to try to run a nitrogen stabilizer over everything, and how many percent of checks without running it would you need to leave?
So that's always a good question, is how much is too. Typically with farms, I would say on average, when we talk about 2,000 acres, and because we've done this analysis, like what's typically we seen? We're typically seeing somewhere between 20 to 35% of a farm's acres being eligible for the credit. That's typically what. Now, are there outliers to that? Of course there are, right? There's some that are less, there's some that are more, just depending on what they're doing.
What if you had a new practice that you wanted to use? You were pretty sure you wanted to use on everything.
Mm-hmm.
Could you use it on 90% of your acres, but only take 35% as the credit?
Oh, sure. I mean, you could. Yeah, you could.
And
Yeah, that's something you could do for sure. Yeah. What they're after is people just not trying to abuse it, but actually say, which I like the way you're thinking though. I mean, that's the way you want to think, right?
Sure that you want to do.
Yeah. You just need some systematic approach to what we're doing. That's why I say when we talk about the higher ends of that or efforts going outside of that, there's no limitation on how many acres we can include. But when we have multiple experiments or multiple evaluations going on, that just strengthens our case that we have eligibility. I've had farms that have had 80% of their acres qualified, but they've been doing dozens of different experiments across their farm where they're just trying a bunch of new things. Yeah. Let me give you some ideas of some things that you might do. Now, this is not an exhaustive list, so if you don't see something on here, that doesn't mean it's not eligible. But here are some examples of things that you might be doing that would be eligible for the credit. Okay. But it can be simple as trying a new hybrid, trying a new product, things like that. Okay? Any other questions so far? Yep.
You mentioned not being able to include equipment costs. What about like in technology costs, the cost of a new monitor or something that goes into that?
Yeah. Seems like you should be able to, you can't, unfortunately. Yeah, I always think people get in trouble when they start confusing common sense with tax law, right? It's not always making a lot of sense, right? And some of the lines seem very subjective. That's one of those that is just subjective, that they say you can't include. Yeah. You guys have any questions over here? Okay.
So that makes too much sense because now I have a launch, I can record this information.
That's right, yeah, exactly. Yeah, that's, like, if I'm Eli Lilly, I don't get the cost of a lot of my lab equipment that I need to conduct the experiments, right? And the recording equipment. I don't get that, which is like, why would, like, that doesn't make any sense. That's just how it's worded, that's how it's written.
But on the acres you're doing a test, those tests, you can take off your seed, fertilized, chemical,
That's right.
even though you're doing the same across all the acres on those particulars.
So, repeat that, so
So say you're doing a test on your seed,
Mhm.
on hybrid.
Yep,
And you're saying we can also take the chemical and
yeah,
fertilizer?
that's right, yeah.
On those acres, even if we're using the same chemical and
Yeah,
fertilizer across
100%.
the whole thing?
Yeah, because I would argue, and again, I'm an accountant, but I would argue that's probably the most effective way to run an experiment in which you're just changing one variable, right?
You're reducing the other variables you're changing, yeah.
Yeah, right, so if I'm changing,
But even if you were gonna use all that stuff on those
yeah,
acres.
that's
anyway,
right, that's right. Yeah, that's right. So on those acres that are eligible, it's gonna be all the seed, all the fur, all the chem is gonna fit into that.
Because that way you can isolate that this is truly the difference just based on seed.
That's right.
So everything else has to be held the same, so you have to keep the same practice on that.
And I can't tell if the seed's gonna work unless I spray it consistently across everything.
But you were gonna do that anyway. Doesn't matter.
Don't tell the IRS that.
Yeah. What are you doing, man? Come on. What do you want this credit or not? No. But this is,
He's Bartholomew County.
yeah, oh my God. I'll draw pictures. No. I'm joking. All right.
Greg, in this area we have several pivots, so irrigation.
Yep, good, yeah. Now, you're not gonna get the cost of putting in the pivot, but yeah, if I'm starting to irrigate fields and wanna know the performance, yeah, that absolutely is gonna. There's so many different things that are gonna qualify. Just think of all the variables that you change year over year to try to increase yield. That's things that are gonna qualify. I know, here's the problem, because I grew up around the same area you guys did. It starts to sound too good to be true, doesn't it? Like when I start saying this, you're like, bullshit. Like there's no way this is true, right? It just, like I said amongst my first comments, there's a big difference between eligibility and awareness. Now, if your CPA was standing next to me and said, yeah, listen to Greg, it would bring some credibility, but yeah, you're just absolutely eligible. And the IRS agrees. The IRS, by the way, they understand how you're eligible, but I guarantee not one of you got a letter from the IRS saying, hey, we think you missed this credit, you ought to look at this, right? That's not ever happening. You're never getting that letter, right? But this has actually been tried in court, right? In tax court. There was a grower in California that claimed the credit, and the IRS tried to say, it's farming. Like, what are we doing? That doesn't qualify. Farming's been around for thousands of years. How is that eligible? And this went to court, and the courts found this absolutely qualifies. Absolutely. And they said, this particular farm used John Deere Operations Center. But the judge in that case said, John Deere Operations Center is the gold standard for tracking research and development activities. And he didn't say not in farming, but across all industries. Because when you guys are using that, it's like you have a note taker doing everything, tracking everything that's going on, how much is going on, when it's going on, all those things. That's why the documentation from a planting and harvesting standpoint is so pristine. Again, if you're using it. It's not enough just to have it, you have to use it. Okay? And then, Brian, you talked about you guys manage some of this data as well, right? So, I mean, just having that, that's what we look for. Like the professionals that we have, they're very fluent in that software. So they're teasing out all this information from this. A study that we go through, and I'll talk about what that would look like, takes very little of your time, probably 6 to 8 hours of time over about a 4-month period. It's not a heavy lift here for you. Okay?
So,
Yep.
say you pay him $5,000 to analyze the data, is that whole
Yep,
$5,000?
that counts. That counts.
And that's dollar for dollar? Or is
Remember,
that-
you get 15% of that.
15%.
15%. You don't get the $5,000. You get a $5,000
So
deduction.
it'd be $750.
Yeah, yeah, that's right. So you get a $5,000 deduction
Okay.
off that. So that reduces your taxable income by $5,000. In addition to that deduction, I also would get a credit of about $750.
So when it's all said and done, you just take $750 off your tax bill?
When it's all said and done, yeah, that's right. That's right.
Even though you've already written that $5,000 off.
That's right.
Whatever you.
Mhm. Yeah. You get both. You get a deduction, and on top of it, you get a tax credit.
But we've already deducted.
Mhm.
It's a true double dip.
So now we're gonna do it again?
No, when you claim it, so when we do a study, you've already deducted those expenses.
Right.
If that deduction, or if we've already claimed it and we go back, we're not re-deducting that. We're not taking $5,000 more, but we're keeping that $5,000 original deduction. In addition to that original deduction, it would also be entitled to in this case, a $750 tax credit. The federal credit and the state credit are about equally divided. So about a 7.5% or 8% credit. So you'd have about a $400 federal credit and about a $350 state credit in that example. Okay? Okay. Let's talk just briefly about this one big beautiful bill that happened. I'm not going to dig too far into this because this gets real boring real fast. But last July, the president signed the one big beautiful bill. The reason I'm talking about this is because this is changing our timeline of when we can file or how long we have to file for these credits. Okay? So there was a tax law change as part of this bill. I won't, unless you want to hear the particulars of it, what ultimately happened is they've shortened the window for you guys to go back and claim these credits until July 6th of 2026. And that would specifically impact the 23 and 24 year, right? Because think about it, when I filed my 23 return, I would have filed that probably by March 1st of 24, right? So you would think I'd have, 3 years, so that'd be March 1st of 2027. You don't get that long. You get until July 6th of 2026 to file that. So in other words, if you want to do this or you want to explore this, this is something that you need to probably think about sooner rather than later, because after that, you're going to lose out on those two particular years, 23 and 24. Okay? 25 moving forward, and this is a permanent part of the tax code. So every single year, you're going to be able to take advantage of this credit to the extent you do these types of activities. Okay? Does that make sense? So what happened was that one of the impacts of this law change was we have to file by 26, but this was broken for a few years. In President Trump's first term of office, he passed something called the Tax Cut and Jobs Act. That was his first piece of legislation he passed. That was done under a process called budget reconciliation, which there's some certain rules you have to follow. One of those rules is that over a period of time, it has to be revenue neutral to the government. The big key to that legislation was they dropped C Corp rates. They went from a graduated rate, like we get charged on the personal level, to a flat 21%. All right, so C Corps now have a 21% tax rate. Well, what happened was there was a loss of revenue for the government, so they had to make that up. So you remember talking about that $5,000 expense? Well, for a period of 22, 23, and 24, before this law was passed, you actually lost that $5,000 deduction. You had to capitalize and amortize it over a 5-year period. Long story short, you would have paid a lot more tax, okay? July 4th of last year, the president signed that to fix this for companies that have revenue under $31 million, okay? And so that's fixed. So that's why I said I don't want to bore you with the details, because for you guys, it's not going to impact you other than it's got to be done by this state. It's got to be filed by this state for those amended returns, okay? All right.
Just for 2022.
No, for 23 and 24. 22, your statute probably is next Monday, right? Because that's when your 22 return would have probably been filed March 1st of 23. So we have 3 years, so it'll probably expire it'll be March 2nd this year, because March 1st is on a Sunday of 2026, okay?
Quick question though, if
Yep.
if you have a different tax year than like the fiscal, like December, if it's later.
Oh, so if you're on a fiscal year?
So if it's
Awesome.
different, like,
Yeah,
let's
perfect.
say ours is the end of June, so then you would really have more
Perfect.
time.
Yeah,
to
you'd
fix
have,
that.
yeah, you would have until July 6th, pardon me,
Okay.
for the 22 year.
Okay,
Yeah,
thank you.
because you guys are getting ready, yeah, so have you filed your 24 return yet?
Yeah.
You did? Okay, gotcha. All right, so let's talk about how you guys can leverage the value or the potential value of this. So, can get refunds 22 through 24, and at this point 25. We have a potential carry forward. But here, remember me talking about how you guys get out of tax? It's these things right here. It's 179, prepaying, bonus. Hey, can you hold on to that check? I mean, I've had farms say, don't, listen, I'm not checking the mailbox in December type thing, right? Or hold on to that at the elevator or the co-op or whatever like that. I've seen it all, right? This allows you, as I said before, to keep the money you guys have earned, right? That's what these credits are about, to reinvest it. The hopes are that in pursuing this credit, that you guys try new things, and hopefully some of those things work. And ultimately, strategically for the federal government, for the country, some of that works and it increases yield. That's what they're after here. Okay? So that's why if you guys have traditionally had a strategy of deferrals, I'm not saying don't ever use 179. I'm not saying don't prepay expenses. Those are all really valuable and they make a lot of sense. You maybe can throttle back, right, and change your fuel mixture of how you do this to save, because once I have a credit, it becomes algebra, right? I know how much credit I have, so that means I can recognize how much income I can recognize to offset this, and then I just start working backwards from there. So rather than kind of look at your tax return from the top down, you're kind of looking at your tax return from the bottom up, because this is where I want to be. Now, how do I get there from here? And recognizing credits, and then that recognizes how much income I'm going to have, which recognizes how many deductions I'm going to have. That's how this would work. Okay. All right. I have some case studies for you, just hey, here's some examples of what we've seen. So these are all I think all of these case studies are just federal credits. Okay, these are not state. So when I say this, I want you to double this number because it's effectively doubled in Indiana. Okay, so here's an example: 2,000-acre row crop farm. So this one had $159,000 in federal tax credits. Okay, these are the types of things they were doing. This probably feels very similar to you guys in this room. Okay.
Was that for 1 year or the whole?
That's for 3 years.
All the way back.
That's 3 years on this one. Yeah. Does that make sense? I'm gonna go to the next one.
And that's actual dollars. I mean, basically, that's not.
That's money. Yeah. That's 100%. That's refunds. Mm-hmm. Yeah. That's refunds. I have one more. This is a larger farm. This is an 8,000 acre farm. So they would have had $500,000 in tax credits for it.
How are you evaluating labor part of that? Are you just taking the acres that you're doing trials and getting the percentage of?
Are you using Op Center or? Yeah, Op Center tracks the time in the field. That's one area. If that's not a reliable because it's not being tracked, the IRS allows us to use reasonable estimates of time.
So
You know,
if you, just for example, if you got 1,000 acres and you do tests on 250 acres, could you take your total labor cost and divide that by 4 and use 25%?
That
like
would be,
you would to see a
yeah.
chemical.
So here's the thing, that the assumption that's being made, so you have to factor that down more because you're not in the field, you know, in January, February, March, right? So you'd have to factor it down. But those are some of the tools we would use to get at that number. So you can use reasonable time estimates. We just have to establish a connection between, okay, here's the time I spent in the field, here's how much time I spent. This is what the IRS is going to want to see. Here's the time I spent in the field. Here's how much of that time was on acres that were eligible. Here's how those acres are in fact eligible for the credit. Here's what I was going through. So we would have a very detailed discussion. And if you guys want, here's what, if you guys want, this is what a study looks like. If you want to pass it around. That'll show you kind of the level of detail. So to get at these numbers, a lot of times we're using statistical analysis, which is not something we dreamt up. It's the way the IRS wants these things put together to develop what portion of our seed, fertilizer, and chemical, because ultimately that's going to come down to some percentage. So it might be on your Schedule F that we have these listed out, and we're going to take a portion of those that are on there, okay? And we would do the same thing for labor, okay?
So you would just figure a percent of your.
Yep, percentage, yeah, it'd be a percentage.
Or a percentage of your acres and then.
That's right. That's right.
But you would not do that on the equipment side or
No.
the parts and
No,
that kind
none
of
of
thing?
that. No. Unfortunately, you're not allowed to include that.
Time for planning on the front side and else on the back side?
Yeah, planning, yeah, absolutely, yeah. That's not to say that you when we're planning on what we're gonna do the next year, those are gonna be eligible, or when I'm reviewing the data, right? On the back, like you said, the backside. How does this perform? What should I do more of? What should I do less of? What am I gonna try this year? Those are all things that are gonna qualify, okay? Okay. I know we're in a room, so nobody's gonna say, hey, here's how much tax I paid. But if you want to ever talk to me, you can. I'm happy to talk to you. I'm gonna be around a little while. Also, Brian, were you gonna pass around a sheet of
Yeah,
some?
we got a sheet back here.
Okay.
Pass it around.
If you want to talk to me, there's zero cost to talking to me, number one. Just put your number down, your name, number, your email. I can send you, or if you just want me to send you information, I'll have my team send you some information, by the way. Just, you don't have to use me, by the way, but if you can pass it along to your CPA, you can have them, you can talk to them, or they can call me, any of that stuff. I'm more concerned that you guys claim it versus who helps you claim it, honestly. But here's what we do. What we start with is like a 20 to 30 minute call, just trying to understand a little bit about your operations. We'll gather some metrics. So some of the stuff I'm going to ask you is like, how much do you spend on seed, fertilizer, and chemical costs in a given year, on average? Then what we'll do is we'll run some analysis. Having the luxury of having worked with a couple of thousand row crop farms, we can kind of line you up and say, plus or minus, here's probably what we're looking at here. Right? And then we can come back and say, here's what we think. Right? Here's probably what you're looking at in terms of credits. And then if you share with me how much tax you paid in those prior years, I can kind of model out, well, we're probably looking at this in terms of refunds and this in terms of carry forwards and all those types of things. Just so you have your eyes completely wide open as to, do I want to do this or do I not? What would be the benefit if I did do it, and how would that work? Okay? Does that make sense? Okay. Now, one of the questions I have is, okay, but what if you did a study? What do you do? And this is what a study would look like that we would go through for you. So the first step in a study is what we call our value assessment. So it does not cost you anything to get started with a study. There's no retainer fees, deposits, none of that, right? You're not gonna pay us any of that. What we're gonna do initially is gather some information. We'll have a project team assigned. These are gonna be folks that are agronomists. They're gonna that speak your language, because you'd have to dumb it down for me, so you're not gonna have to do that. I'm involved every step of the way though. So in other words, I'm not stepping out of it, I'm just looking at this from a tax perspective. So what we would do is determine, after looking at our, gathering some information, we're going to have some operational interviews with you. And basically what's gonna happen at the end of this phase here, we're gonna answer 3 questions. First question is, do you qualify and can we prove you're eligible? That's number 1. Number 2, how much do we qualify for? Like, what's the value to you? This is not gonna be an estimate based on the companies that we, or the other row crop farms we work with. This is based on you. Okay? And then thirdly, what does that mean in terms of benefit? Are we getting refunds? Are we carrying it forward? How is this gonna work? If we determine you're not eligible, you don't qualify, this isn't gonna work for whatever reason, then at that point we would terminate the study, we would disengage, you pay us 0. We just walk away. Okay? There's no fees. If we do find credits, then we'll go to the second phase where we're developing a project list. We're going through, and for those that have seen the report, you can see even at the back end where we're talking through projects and things that we've tried, and we're dissecting how they're eligible for the credit. We're gonna finalize those credits and we're gonna give them to your CPA. And then we will hold their hand through this process, right? So how to amend the return, that type of stuff, if amending a return makes sense. And then the final, so this will be with a bow on it to your CPA. They'll have, I mean, here it is, here's the forms you fill out, here's all the supporting documentation it needs to accompany that amended return, and that's it. And then the last step in this is going to be just the delivery of a report like that. It'll be in an electronic format, but you guys will, you'll have a copy, your CPA will have a copy, and then we'll retain a copy as well, okay? I know the number 1 question on everybody's mind is, how much does this cost? Right? So, mind reader? Right. Okay, the way we bill, our fees are 25% of whatever credits we identify that you can use. Included in that are 2 important costs. Number 1, we'll happily pay for your CPA fees associated with this. If your CPA will allow us, we'll pay those fees. Secondly, if the Internal Revenue Service or the state of Indiana has any questions related to any of the work that we've done, we defend all of our work at no additional cost. That's all included. So it's not your CPA, it's not you, that's what we do. Okay? One question people have is, well, what's your success in defending these? Like, how successful are you once you're claiming these credits? So to date, we've saved U.S. businesses just over $16 billion in tax credits. Now, the question people have is, 1, am I going to get audited? Right? That's a question everybody has. Am I getting audited? Is this going to trigger an audit? The answer is, I'm never going to guarantee you're going to be or not going to be audited. I'd be lying if I said, yeah, you're absolutely not going to be audited. If I were betting, I would bet you wouldn't be audited, because you just look at the IRS examination rates. The odds of being selected for an exam by the Internal Revenue Service, anybody want to guess what it is?
1 in a million.
It's a little bit more than that, but not much farther, right? It's less than 0.5%, right? The IRS just aren't doing audits. The way, supplying all this information on the front end, they look at it to make sure it is sufficient, and that kind of passes. But from time to time, you guys might have the name of your farm on the side of your truck, and you might cut off an IRS agent, and they're like, I'm gonna get that good, right? And so sometimes people get audited. Our success rate, we've successfully sustained 96% of our credits successfully under exam. Okay.
Of the 4%, how many of those would you say that you
Yeah, and the common, that's a good question, is well, why, if you guys weren't iffy, why is it not 100%? And so, sometimes, I mean, people are human, sometimes you disagree with the IRS, right? And so what happens is, I can give you a great example of this. I had one client a couple of years ago that went through an exam. The IRS came back with an offer of 90%. Basically saying, we'll give you 90 cents on the dollar.
That was my next question, was it a total throw out or just partial?
Yeah, and so when you come to an impasse at the audit level, you can go to appeals, right, where you get somebody else to do. Because when we have these things examined, it is both barrels of a shotgun for us. I mean, we don't mess around with these. We are aggressively defending the positions because we know they're eligible, right? But in this particular case, the IRS came back and they said, if you don't accept this, you're more than welcome to go to appeals. And the appeals process at that time was taking about 2 years to get through. And the client said, just give me my 90 cents, right? Just give me that and I'm fine with it. For us, that's a 10% loss, right? We would capture that as a 10% loss, even though, do we feel like we would have availed appeals? Yeah, but we didn't get 100%. That makes sense? Yeah. Here, let's see. This is my contact information right here. If you want to take a picture too, you can take a picture of this. This is E-Steps as well. She's on my team, so if you take a picture and you want to get a hold of me, that's an easy way to get a hold of me. You can call, text, email me. I'm happy to do any of those things for you. Are there any other questions anybody has? Yes?
Say you have somebody else that does a trial on your farm, say Brian does a trial on your farm that you don't do, but they take care of, or maybe something they wanted to do, or another company wants to try something, but they're doing it for themselves and they keep all the data and all. Are you still eligible on those?
Depends on who buys the inputs. Who's buying the
If you
inputs?
buy all the inputs, and if you get the data, I assume you have to get the data.
That's right. One other question, thank you. Yeah, it would be yours. It's really tied back to who buys the inputs, right? So you guys may have a bunch of, sometimes farms have a bunch of different entities. They'll have a land holding company, and then they'll have, equipment over here. The credit's going to impact the entity that is buying the inputs. Number one, that's going to be, that's how that is going to work. The way it works for pass-through entities is the credit would be created at the company level, and then on the K1 it would flow down to the individual owners if we have a partnership or an S corp in that case. Last thing is data, right? People are very sensitive, as they should be, about their data. Your data is yours. We do not sell it. It's not disclosed to anybody. It's just, we review it for purposes of determining the eligibility of it, but it's yours. Okay. Did you have a question?
Yeah, one more.
Okay, well, yes, please.
Just one. Say
We would have been eating pizza like 20 minutes ago.
say going back in the previous year,
Yep.
you know in your mind, I tried this on this field, and I have the whole field data versus other fields in the farm data. Is that going to qualify or not?
So you have, say that one more time.
Say you did something on a particular farm, you
Okay.
did this 100 acres
Yep.
here,
Okay.
and that's the only place you did it.
Yep.
And the other farms you did not.
Mhm.
Would that qualify or would
Sure.
it? Okay.
Yeah, that would.
Okay.
Yeah.
So comparing this field to other neighboring
Yeah,
fields
sure.
that practice.
Yeah, it may not be a real scientific. Some
Yeah.
of this stuff.
No, it is. It definitely is. Keep saying
Yeah,
that.
what are you talking about? Everybody gets a lab coat. You're going to farm in a lab coat this year. Everybody's farming in a lab coat. Guys, I appreciate you taking time out of your day. If you have any questions, like I said, I'll stick around and answer any that you have for me. And then if you want to sign that sign-in sheet, please do, and I'd be happy to get you some information as well.
So just a couple takeaways, just going through, Greg, please correct me on this if I'm wrong.
Yep.
Why does this work? Because A, the government's trying to incentivize practices they want us to do, which is namely increasing yields. So that's why they're giving us these type of credits.
Yep.
Another one I had was a JD Op Center, or a way of managing and maintaining records is critical. I tell you that because making sure we put things in the monitor at planting, at harvest, at spraying will help document that. So as much as no one wants to take the time to stop and put the right things in the monitor, that's going to be critical to helping document the practices we're doing here.
That's paramount.
Yeah.
You need it.
Last thing I just gotta say, I don't think we'll need to be the experts today on all these things. That's part of the interview questions and process and trying to figure out. You're going to ask the questions to help us dig down and find layer by layer what those differences are.
Yeah, absolutely.
Right?
Yeah.
Okay.
Yeah.
Awesome. Appreciate everybody being here. Greg, thank you very much for
Yeah,
your time.
you guys are welcome. Yeah,
Well,
thanks. I appreciate it.
Peaches here. Drink from the fridge. Stick around. Thank you.
I'll have the sign up sheet up here.